Okay, everybody, welcome back to Build a Profile. We are now in Module 11. Just a couple more to go here. Module 11, what software and equipment do you need? So, we've talked in prior modules about ways to think about the markets, questions to ask when you put on a trade, products that you can trade, ways to identify opportunities and arrange market information. Now I want to talk about just some of the raw mechanics of software and equipment that is used to be able to make good trading decisions. I'm a full-time trader. I'm in markets every day, but I'm also on the go working on other entrepreneurial projects. And so I needed a system that supports me wherever I am. And so that's what you're going to see is what software am I using, what vendors am I using, and how can I keep my system both cost-effective, but also reliable and mobile. We always talk about risk in every one of these modules. Technology is another form of risk. So having a system that you can rely on, you don't want to be in a spot where you need to place an order and can't. So being able to see what you need to be able to see, when you need to see it, is crucial. And the software and equipment that I'm going to recommend to you has all of that in mind. And the objective of this is really at the end that you can be able to say, well, what software and equipment is needed to build your trading and in your trading business and your trading approach. It's going to be a little bit unique based on how involved you want to be, how much money you want to put into this. I think of a lot of this as business cost. So I look at trading as a business. It's not a gamble, but it is a business. And so these are the tools that I need to be able to execute in that business. If I was building a house, I would want good, reliable tools as a contractor. As a trader, I want good tools that allow me to see what I need to be able to see to make good decisions. Because trading, I think more than any other industry, has the opportunity for infinite upside and growth to the business. You can always add another contract and use the same approach, but just add another contract. So this allows you to see some of that stuff. And we'll begin here. We'll begin with the concept that the system is more than a system. So while we're looking at software and we're looking at equipment, know that your trading system and what equipment you need really is built around and should supplement and support your approach and methodology. It's really just an extension of what you are already looking for. And to that point, we need to have edge. So there is a lot of chatter, and this is a place where you can spend lots of money chasing down rabbit holes and picking up bad habits, looking for some system that's just going to tell you buy here, sell there, or it's going to guarantee results. Guys, gals, there are not systems like this. They're not effective. Been in the industry long enough to tell you that a lot of that is ineffective, or it may only work in certain market conditions, and then other market conditions it will not be suitable. But trading edge, when we talk about edge as a trader or investor, is the posture of someone who has discerned an edge relative to other participants. It's saying, hey, I've got a better batting average than everybody else. The guy who goes and can, when Ted Williams could bat 400, he's got a better edge than the guy that can bat 250. If somebody can throw 15 strikeouts a game, he's got a better edge on somebody that can do 5. So knowing where your edge is relative to other participants, so that's, and then you're then operating with an increased position of confidence because you know that what you have works. There are no 100% systems. Have to be clear on this. You will take losses. And for some people, that's enough to know that you shouldn't be in markets. Because if you can't deal with the idea that you are going to be wrong sometimes, then this is not the space for you. So more on this, I want to say, beware the MacGuffin. The MacGuffin, for those of you who are old enough to remember Alfred Hitchcock, is this desire of the character for this one thing that will overcome the internal problem and conflict of the character. It's the ideal thing. It's why so many people have sunk and sink money continually into trading approaches that don't work, because they're looking for something that's going to give them results that they want. And so rather than having a framework that allows them to discern that, which I'm hoping that this whole framework is meant to help you discern what is valid and what is not, what will add value to your approach and help lead you to edge and what will not. But beware the MacGuffin. Beware the person who says this is a fail-proof way to make money in markets. Tied to the idea of the MacGuffin is something called style drift. So, in any trading system, one of the problems that happens, and this is because you can't have a 100% effective trading system, is that when what you see or how you're performing is not performing the way that you want, or maybe what you had was working for a while and is no longer, you'll start looking for additional things to add to your system, believing that that's going to give you an edge. Now, if you don't have an underlying foundation of what exactly it is that you're trying to see, then you're just adding things on top of it. So be mindful of this. Once you understand how auctions behave, this is why in the early modules we talked about the 4 behaviors of the auction, because these are things that you can rest on. That's why we talked about statistics. That's why we talk about the profile. These are things that you can lean on as your foundation and then augment as you want other things, as you want to be able to see additional aspects of the auction helping you make trading decisions. It's really, really easy to go hunting for some magic clue or holy grail. When things get tough, you have to guard yourself against that. This is, in a sense, the MacGuffin. Now, let's talk about specifically some software and approaches that you can use now that we've talked about the MacGuffin and style drift. And one has to do with the analysis that you're going to do. So when you're looking at building your system and the equipment and software that you're going to use, you have to make a decision on what is going to be the primary decision driver for your approach. Now, we've talked about what we look at, but there are a number, and they can be valid. So one of them is the fundamental, which we talked about. This is this fundamental approach to markets that says, hey, I'm going to buy crude oil because I believe that it's undervalued relative to what I know about the fundamental supply and demand in the world. Okay, that is a appropriate approach in decision making, so long as you stay making decisions in a fundamental space. The other way is technical. You look at price action from the day-to-day auction, or you're looking at derivative price indicators, which we're going to talk about here in a second, or structures, and you're making decisions around what's happening around price. That can also be effective. Or as we've talked about in this course, is the idea of behavioral. How are participants reacting to price, and what does that tell us about what comes next? Now, I'll tell you what, I know traders who have been effective and successful consistently using each one of these 3 approaches. Now, I have bias. I believe that you are most effective using the behavioral. However, you can be effective with all 3. Where you get in trouble is when you mix them. So if you maybe enter a trade based on a fundamental bias, but then you question that based on something you see technically, or you get in it based on technical analysis, but then you question it based on a behavioral or fundamental. This really causes problems for traders. So what you have to do is you have to decide what is going to be the primary approach that I use, and then you're going to kind of have to tune out everything else. And this will in some ways should simplify your life. Because I'm a behavioral trader and I only look at the behavior of price action that's taking place in front of me, I really don't watch a lot of news around markets. So I used to be a CNBC junkie, and anything that I could find, I was on Twitter all the time trying to find people. By the way, most people who are on Twitter have no idea what they're talking about, or they're rehashing something that they heard from somebody, but they're not really actively trading. But I got rid of all of that. My life got simpler when I decided what approach was going to work for me, and I just keep honing that one. Now, one thing I'll say about the fundamental. Fundamental is effective. You usually have to be working on a much larger time frame, meaning, if you're going to be a position, it's going to be months, sometimes years, and you also have to be extremely well capitalized, because sometimes these approaches take a long time to come good. Where you can be at a smaller capitalization level on technical or behavioral trading, and those trades can be much quicker in duration. Okay, charting. So what is charting? Charting is the idea of arranging information about the auction so that you can make decisions, primarily around the technical or behavioral. And when we have charts, we're arranging price. There are a number of different charts. So there are time-based charts where you're organizing range of price over time, or there's range-based. So that's saying, this chart moves based on so many increments of price. And then there are volume-based, meaning after so many trades, show me X, Y, or Z. So I just want to give you an example here. I'm going to pull up a chart, and we're going to hone in We're going to maximize the sell. Okay, so this is a time-based chart that primarily these candlesticks here, all of these squiggly lines. If I zoom in here, and I'm going to zoom in and isolate some of this. Okay, this is a 5-minute period that's showing a range of price. So this is a ranging price by time, and each one of these candles is telling me something. You know, this the range of price, the color or lack of thereof tells me whether it was primarily selling or buying, but it's arranging it by time. Now I can change how I want to view this. So I can look at this same chart and I could say, all right, rather than looking at time, I want to look at a number of trades. So what I'm going to look at is every 500 trades show me this, present to me the same chart. So it creates, it's still using a candle, but rather than time, it's based on 500 exchanges of the price. Okay, that's another way to arrange the same information. Okay, the last one is to look at range. So this could be and you're going to see how this is going to change just a little bit even more. So this is showing me a new, each one of these are consistent. So each one of these candlesticks is the same number of price interval. That's another way to arrange. So time is not respected, volume is not respected, it's just purely looking at range. So when you're looking at organizing in charts, you can look at time-based, range-based, or volume-based. So know what you're seeing when you look at it. I prefer time-based. I've tried using range-based and volume-based. For me personally, time-based works the best. Indicators. So an indicator is another way of trying to arrange and decipher pricing. And these are where you can sink a lot of money into stuff that doesn't work. I'm going to talk about why, but let me talk about first what some of these indicators are. They're basically 4 different categories of indicators, but there's volatility indicators. So volatility indicator is something that you would look at on a chart that's going to show you the rate at which price moves. So sometimes you're going to have market cycles where it seems like prices don't move very much, and you'll have other market cycles where the price moves as much in a day as it did the prior week. Okay, so these help you see how volatile an instrument is at the time. There are also volume indicators. So this is measuring, is the volume in the direction that I want it to go. So like for example, let's come back over here and look at a 5-day, 5-minute, and you can see arranged under the price, I have volume bars. So for example, here's a strong downward candle. It's matched with strong selling volume. So that's an indicator that there is some sellers going with this. If I saw price going lower, but not a strong volume. In fact, you can see this move back here. There was a move lower, but it wasn't as strong as the prior move lower, so that we were running out of sellers at that point. So that's an indicator that can tell me something about the auction in addition to just looking at price. There's also momentum indicators. So these are measuring the speed at which the value of the security is moving in a given period. A little bit different than volatility. Volatility will kind of show you what's an expected range. To a classical volatility indicator, something called a Bollinger Band, or you look at standard deviations, or instruments that look at some kind of expansion of price. A momentum is tracking how fast is it moving. It can kind of give you an idea of how, like things that are in motion tend to stay in motion, and it's a way to judge that relative to recent price movement. And then the last is trending indicators. So these help you discern, is a market kind of moving in one direction or not, or another. I use, in one specific way that I look at that, is something called a moving average. That this is different time frames. I have a faster moving average. That's the one that tracks closer to the price, and a slower moving average. But when you can see a general slope of the moving averages, that can give you an idea of what direction that auction's trying to go. When it's just going kind of sideways, that's an idea that the auction is kind of going sideways. So they can help smooth the price over the periods and give you an idea of the general direction that the market's trying to go. But that's where those can be helpful. But know that whatever you put on a chart, You need to have a reason for why you put that on the chart. I have seen charts like this, and I look at that and go, how in the world do you make a decision based on this? Everything that you have on a chart, you should be able to defend why it is on your chart. What is it helping you see? If you can't tell me why it's on there, take it off and just start with price. Look at price. How can I watch price? And here's the thing about price. So I had a conversation with one of the chief market analysts at R.J. O'Brien. R.J. O'Brien's one of the oldest futures brokerages in the country. And this guy's been at the desk for 30 years. And he says, you know, look, here's the thing about indicators. An indicator is not price, it's a derivative of. And no one in this industry makes decisions that really drive the market based on an indication of price. What I mean by that, it's a derivative of price. A moving average is generated based on where price has been. It is not a forecast for where price is currently or where it will be. So if I see price away from a moving average and say, well, I'm going to trade back to moving averages to reconnect that, you have no idea when that's going to happen. And there's not anybody else who's looking at that and saying, well, you know, I need to do the same thing. The only thing that all market participants are looking at is the price. That's it. So everything else that you do can help organize and give you a perspective on the market, but it is not a guarantee or a signal of do this or do not do that, particularly as it pertains to something that people will call being overbought or oversold. And you know, one of the momentum indicators is the idea of is price too strong or too weak. In auctions, there's no such thing as overbought or oversold. There is exhausted and there is continuation. And that's a price generated perspective. A momentum indicator is not going to give you that. In fact, if you'll see people talk about, well, this market's overbought or oversold, they're just looking at an indicator that may or may not work. They're probably not making a decision on that. So they're looking at a technical indicator, not actually what is price doing. Price is oversold when it finds buyers that go in the other direction. That's when you found that was oversold. You can only ever tell the market was oversold or overbought when you see the counter behavior. Okay, now when we talk about profiling, it's clear. I want to be clear that profiling is not a indicator. So an indicator is trying to give you some type of signal. You know, profiling does not give you a signal. Profiling arranges the market information in a way to help you understand who's doing what might likely occur based on the actual auction and movement around price. So when it comes to your system, one of the things to look for is something that that I have in my system is something called a TPO chart. And this is 30-minute information that is arranged. So these are 30-minute sessions, periods, that collapse down on themselves to show you where is the auction creating value, what's below value and above value on that day. So on this day, for example, this is above value, this is below value. Here's the meat of value. Okay, this is where people were agreeing on price, and it's going back and forth across that. So where's advantageous trade location? Up here. Where's advantageous trade location? Down here for rotations higher. So it's not an indicator that tells you specifically buy here or sell here, although there are, in the way that it arranges information, it's showing you in such a way that you can make decisions on what's likely to occur. And that's really beyond the scope of this course, but this is kind of a next place to learn, is how to use this to help you understand what's taking place. The other thing that we look at is something called a volume profile. So a volume profile in trading system is where I'm seeing the volume at price over multiple sessions, or maybe even in the same session. That's helping me see where in the auction are people accepting prices. See, when I look at just if I go back here and just look at these bars, if I'm just looking at price bars, I don't know the value of these. But when I look at the profile to the right, I can see that there are specific prices where they're doing more business, and it gives me more information, helps me see inside of that bar that I couldn't see just looking at it. And again, this is just this is a way of arranging the auction by time and price. But the volume profile is what helps me discern levels that I'm looking for specific types of activity. On this tool specifically, it's actually it's combining both the TPO, which is the time price opportunity. So this is arranging. You can see there's a build out by time, and then the color intensity tells me where the volume was. So the darker, more red, that's higher volume intensity. The magenta is less volume. The white is the least volume. Now you'll notice that time and price often are in agreement. So the place that we spent the most time was also the place that we did the most volume. This is an overnight or Globex profile. It's showing the same as well. And that's looking at one specific day. Now, if I go and look at this larger profile on the right, this is a composite of multiple days. It's helping me see where is their inventory over multiple sessions. Order flow is another thing to consider to be part of your system. And this applies whether you're going to trade intraday or over several days, but it's looking at how is the auction exchanging hands between buyers and sellers, and how can I see where one hand is left to another, or who is kind of controlling the direction. This chart, for example, shows me it has the time and price candles, but then down here it's actually showing a composite of the running order flow. So if you'll recall from prior modules, we talked about the bid and the ask. It's the volume. It's the net volume of trades, whether they were hit on the bid or the ask. If they hit on the bid, then that's aggressive sellers. If they hit on the ask, that's aggressive buyers. So what I want to see is I want to see price moving with the negative order flow. You can see here late in the day we had a pop in order flow. That told you that that auction was done for the day, going down. Order flow is a really powerful way of arranging in real time what's happening in the auction, and it's not a lagging indicator. It is a leading what's happening. And when this thing stops going down with price, that's telling you that the auction is turning, which is different than, some people will talk about moving average crosses and MACD. These are all fall in the category of indicators, which again are lagging mathematically generated things. This is real, what's happening at the moment. And it can be done, these are 30-minute candles. It can also be looked and expressed at over multiple sessions. So this is actually a net order flow for each day. So, in some ways it predicted the move lower. So we had a move lower on this day, powerful order flow, a move, kind of sideways higher, not enough order flow to take back the prior selling, and then negative order flow again, back lower. When you see the hands tip between those, then you start to see the turns. And again, these are all things that are part of my system. Of course, I'm looking at this every day and I'm making decisions intraday, but they're things to consider of what they're helping you see. They're helping you see who is agreeing around price. And both order flow and TPO charts and volume profile really are for those who are going to look at it from a behavioral standpoint, because I want to see where people are agreeing on behavior or price as a behavior. Okay, when it comes to execution, there's a number of different ways to do that. One of them is to use what we would have just an order entry window, such as this. This is a mobile app where you can put in the symbol that you want, the quantity, what type of order it is, you want to buy or sell. These are option order entries. They're specific to the software. Often the brokerage that you use will have order entry software that you can use. You can also acquire order entry software that's separate from a brokerage at an additional fee that will send orders to your brokerage. Sometimes that makes it a little bit easier. Sometimes the brokerage order entry is really clunky. This right here, which is from Trading Technologies, it's called an MD Trader, is about the fastest way to buy or sell an asset. You can simply click over here to buy. You can click over here and hit the bid to sell. and you're off to the races. You can have preset quantities, and that's a professional tool. But when you're more pricing or just kind of want to enter orders, there's a number of ways. I actually, I mean, this is just entered on my phone. I have an app that allows me to submit orders. Sometimes I'm away from my desk overnight. So if you're on the go and you need to wait, lots of brokerages offer mobile apps that allow you to execute orders. So check with your brokerages and what software they have there. Let's talk about other equipment that you might want to have. Now, this is just a picture of the setup that I have at home on my desk. You may see pictures with lots and lots of screens, and guys have 30 monitors, and as if that's somehow going to make you a better trader or better investor. And the reality is it's just not true. The more you can simplify your setup, the better. This is as complex as my system gets. Everything is profile based. These are actually charts of some of the same products. I've got a chat window up here. I've got my brokerage orders that I can see where products at, and that's pretty much it. But when I'm on the go, often I can look at the same system just using an iPad. And one of the ways it allows me to do that is through something called Amazon Workspaces. One of the things that I would recommend and that allows me to have my system in multiple places is to use Amazon Workspaces. This is essentially a free or very cheap service that allows you to have a PC in the cloud that you can load all of your software in, and then I can pull this up on my laptop. I can pull it up on my iPad. I can pull it up on my desktop and have access to all the software that I want. This you can see actually here. There's the Amazon Workspaces window. This is just a shell that is allowing me to present all this information, and I can close this session and reopen it whenever I want. It's a very, very cool tool to have in your shed. It's really fast and works very well. Some of the other pieces of software that I have, this piece of software is called Investor RT. You do have to pay for this software. It is a really robust data analytics suite of software that allows me to do some TPO charts. It allows me to do some volume profiling, as well as standard time and price charts. So this is a place where I'm often setting levels from a high level, and then I'm using this software, which is Window Trader, which is really where I'm making all of my intraday decisions, because it allows me to lay multiple bits of information on top of each other, so I don't have to look at lots of screens. So when I'm looking to make a trading decision, I'm looking at one chart. I'm often looking at something like this to help me see where is volume accumulating inside of a 30-minute candle? Where is it accumulating for the full day? What's happening in the 5-minute bar? And I can see all of that just looking at one view. Again, the move is to be as simple as possible. Another one out there is Thinkorswim from TD Ameritrade. Downside to this one is it does require that you have a brokerage with TD Ameritrade, but one of the upsides is that if you fund an account with TD Ameritrade, whether you trade with them or not, you can get access to live market data. And this is something that you want to have, is live market data. Now, there are a lot of live charts that are posted on sites like investing.com, but if you want live up-to-the-minute data, often you have to pay for it, and especially if it's on the futures, the commodity side. If it's more on the stocks, you can often get real-time quotes on those. But this has profiling software that is free and not an additional cost that's built into the platform that you can get free for having a funded account with TD Ameritrade. So I've got an account that I just keep just because I can have, especially if I'm working alongside other developing traders who want access to see some of these tools that don't want to yet invest in the deeper tools. Things you can't get with TD Ameritrade. You can't get order flow, so you can't see that aspect of it, but you can see both a TPO and a volume profile and some composites. So you can see an intraday volume profile, you can see a composite profile, and you can see a rudimentary TPO chart. So if you don't have anything else, this is a place to go, and then expand from there. I mean, eventually you'll find that it's not that helpful. But another thing that's helpful about TD Ameritrade is the alert function. which I use quite a bit, is the ability to go in and set alerts, because I'm often making decisions of, I only want to be active at certain prices. So I don't want to look at the markets all the time. I want to do other stuff. And being able to set alerts that then, work to my phone and, ping on my watch, like that works really great. So, being able to set a priced alert is really important. Being able to see those on your phone is really important, just because that can allow you to get your head away from the markets and only be interested around certain prices, which those prices are often determined by the plan that you have, which we talk about in the next module. Often I get questions about news. So like, what types of software and equipment do you need around news? You really don't need much. There will be some people who will say you need to spend lots of money on a news feed so you can be on top of it. Listen, don't waste your time on that kind of stuff. The best news that you can get, it really is just to have an economic calendar like investing.com, which has a good economic calendar of speakers and economic events. It shows you the potential impact to the market. It has earnings calendars on there. And you can, depending on what country you live in and what's interesting to you, if you sign in and create an account, which again is free, you can pay a little bit a year and get all the ads removed. But you can really customize this. I look at this every day, and that's really all that I need. Okay, homework. One is to determine what type of analysis you're going to make your primary decisions from. That's going to impact the software and equipment that you want. If you're making your decisions on fundamental analysis, you really don't need lots of technical tools or behavioral tools. You're going to look at economic reports and look at where is the thing trading based on an assumption of where the value is for the fundamentals, and you're going to make decisions that way. But if you want technical analysis, which technical analysis would use lots of indicators, and if you want to play with different indicators, I think Swim calls them studies. You can go over here and add studies. You can just see all of these different studies that you can add. Again, you can go a little mad. I keep it really simple. I have just a few moving averages aside from price, and mainly profiling across multiple time frames. Also a little bit of volume. And that's really all that I need to see to be able to make the decisions that I want to make. And that works for me. Determine how you want to execute. Do you want to execute on a PC, on a mobile, on multiple machines? That could dictate, like, do I go get a brokerage account with somebody that offers a web app and an iPad app and a phone app, something that allows me to execute orders on multiple platforms. I personally like that. One thing that I would note is to make sure that wherever you can execute, it's using server-side orders. What that means is that wherever you place those orders, if you close down the software on the machine that you're at, those orders stay active. And same thing with alerts. You want server-side, so it'll send it off to a server and it'll hold there until it triggers. So it's not contingent on a local machine driving those orders. Select reliable equipment that supports your goals. Another reason that I use Amazon Web Workspaces is because if my PC crashes, I can move over to my laptop and be back up in seconds. If my laptop crashes, or even if my internet goes down, because I have LTE cell phone on my iPad, I can immediately be on my iPad and be back up and running and not miss a step. And for me and the time frame that I'm often trading, it's important that I have that type of connectivity and that type of redundancy. You may not need that, but do have backups and ways to be able to access things if you have machine failure. I don't spend a lot of money on PCs. You really don't need it, especially if you use something like Workspaces from Amazon or some type of client environment like that. All of the horsepower is done on their side. Really all that I'm looking at whenever I pull up this window is just a screen refresh. So it keeps the processing power really low, and the internet speed that's being fed to this space is super, super fast. So it beats anything that I've got or can get at home, which is really, really pretty cool. Pick a method to alert you of prices. So make sure that you have a way to alert yourself of prices. If you sign up for an account with investing.com, set alerts and be alerted for those. If you have the app with investing.com, that can send you alerts just to be alerted of when certain prices are reached. That's always a really good thing. Place trades, paper trading at first. Again, that's where you start, is always with paper. If you don't know that you have an edge, do not put live money on the line. Never put money on the line because somebody said, hey, I think it's going to do this. Or they likely don't even have money on the line. So don't follow that type of knowledge. Work to find your own edge, but the best way to do that is to actually start putting trades on and do that in a safe way possible. Make sure that you have a way that you can be confident in the trades you're placing before you ever put real money on the line. And then tweak your equipment to make you more effective. I've added Window Trader and I've added Linsoft to my suite of software just because it makes me far more effective in what I'm trying to look for and at the time frame that I'm trying to do. And but it is also there's a cost associated to it. So unless you're confident in your ability to extract money from the markets, it may not make a lot of sense. So keep it simple. Most brokerages these days offer some type of analysis, like a TD Ameritrade. Maybe you don't even execute your trades through TD Ameritrade. They can be a little expensive on the commissions, especially on the option side, that you execute with somebody else, but you use their platform to be able to do some analysis and to set alerts. Can be really effective. A couple other next steps: review the video, complete that homework, proceed to the next module. As always, if you have any questions, shoot me an email, give me a call. A couple other places to send you for equipment and software. So windowtrader.com is for me, it's the Cadillac of looking at behavioral analysis and being able to see multiple time frames in one view to just really simplify my focus. I don't need things that are getting in my way when I'm making trading decisions. And this is showing me all kinds of information in one place, and I can actually see where information from multiple time frames converge, which, just a hint, that makes things more powerful is when they're working across multiple time frames. Linsoft.com is where you can find information about IRT. That's this package of software, which is also very powerful. Investing.com, again, is a great resource to be able to track specific products. It has great and free economic calendars, can actually allow you paper trade, especially even if you don't even want to open a brokerage. You can start practicing with trades there. Encourage you to do that. Thinkorswim.com is where you can sign up for at least a paper money account and get started with TD Ameritrade at opening up a brokerage account to be able to get that platform that you can then access on your mobile device, on your desktop, on your tablets, and so forth. And then Amazon.com/workspaces is where you can get more information and set up a workspace if you want to be able to do that as a client. I'd say, again, fantastic resource, really worked well for me. And then to be able to, one other thing I want to talk about is that, if you're investing more, being able to have clean data is an important thing. It's going to, I won't go into a whole lot, but there are different platforms in terms of what type of data they send you from the market. So some of them will aggregate order flow for the last minute and then send that to you. Others will send it to you on a tick-by-tick basis, meaning every trade that takes place, it's going to send information to your platform. I look for tick data. It is the most accurate to what's actually happening in the market, and it's required to be able to power both Window Trader and IRT from Linsoft. So iqfeed.net is the data feed. That's another cost to use, and it can get really expensive when you start adding different exchanges, because certain products trade on different exchanges, and you have to actually pay to get access to those. And especially on the professional side, it can get really expensive. So once you're really humming and you know that you can make a lot of money in this business, it's a crucial tool to have. It's really the professional level tool to have. Until then, you can get free data, often through your brokerage like Thinkorswim or someone else that can at least give you more of it's a smooth data, but it still works. Okay, that's module 11. What software and equipment do you need? We'll be back with module 12.